Hello everyone, my name is Jerry D'Ambrosio and welcome to this week's special presentation. In last week's essay, Dr. Toledo wrote about a brand new watch list we have included in the VectorVest US program called Fortune's Fastest Growing Companies. I'm going to move right into that essay. Here I am in the views, so I'm going to dial the date back to last Friday, October 13th. Just looking at the overview section and scrolling down a little ways here. Again, title of the essay was Fortune's 100 Fastest Growing Companies. In this essay, Dr. Toledo laid out Fortune's method of ranking stocks. Now, they would rank stocks based on net income or 3 years annual growth rate, earnings per share. All great stuff. All of that is data. VectorVest turns that data into valuable, useful information, and it's really easy to access. And they would also give an overall ranking for both this year and last year as well. Dr. Toledo couldn't help but put all 100 stocks in a VectorVest watch list. I'll show you that watch list in a minute, but he goes on to write about NHTC, Natural Health Trends, and that it's their #1 ranked stock, but they think the run might be over, and Dr. Toledo happens to agree. Let me pull up a chart of NHTC and walk you through some of the observations he's made. So he called up a 5-year chart of NHTC, and we have price up at the top, earnings per share, GRT, price to earnings ratio, and at the bottom, sales. He says, notice that GRT rose above PE on April 8th, 2014. GRT was rising, PE was falling at the same time. He says, what a great combination. And at that time, price was only $4.95. And it rose to a high of $55.45 on November 3rd of 2015. And although GRT was well above PE ratio when it peaked on November 3rd of 2015, you can see that the GRT earnings growth rate was 40% and the PE ratio was 12.39. So even though the GRT was above the PE ratio, it was already heading lower since it peaked back here on March 3rd of 2015. So slower earnings growth appears to have signaled this price decline that we're seeing with Natural Health well in advance of its decline in sales and earnings per share. And NHTC is no longer a top-rated growth stock. GRT fell below PE ratio on August 24th of this year. Price closed just the other day at $24.93. Now he wrote this essay last Friday, and today it closed at $19.18. So it's gotten crushed over the last 4 or 5 days or so. EPS also at $4.65 a share currently, and sales at 244 plus million. GRT also now at -4%. So the stock has surely struggled, folks, over the last couple of years. So let me just zoom in here to roughly about the high. So back in November of 2015, when the stock did peak, you started to notice a slowdown in the earnings growth rate indicator. Let me just take off a few of the other indicators so we can see this better. You could see it peaked back here on March 3rd of 2015. The stock continued to rise. The company was still making money. Let me put earnings on. Earnings was still rising, but GRT's steady decline here after it peaked on March 3rd told us that earnings per share growth was slowing a bit. If I keep moving over, you could see earnings growth rate continued to fall, and the stock really never recovered. It's been moving sideways, trading in this channel now for a few years. On a current basis, like I said, earnings growth is now negative. PE ratio is above earnings growth. And if I go to a 1-year chart, put on our recommendation, the stock received a sell recommendation on July 17th at a price roughly $25.87. About $6 or so higher than it's at now. So you might be saying, well, you gave it a buy here, right? The stock met the requirements for a buy rating on October 3rd of 2017. However, earnings growth rate at the time was -2 and never really changed course. So ideally, what you want to do, let me go back to a 5-year chart. You want to invest in companies when you see their earnings growth rates ascending. They're making money, I'll put earnings per share on. You can see that back in 2014 here, earnings per share really started to move higher and higher, right? Companies making more and more money, growing those earnings at a nice clip as well. Well, eventually that's tough to sustain, and you start to see a softening or a slowing in earnings growth. So now let me move into the watch list. In the Overview Watch List folder, we inserted a new watch list into your platforms, the VectorVest 7 US programs, called Fortune's Fastest Growing Companies 2017. I'll get to the other 3 Fortune's watch list here in a moment, but just know that those were watch lists that I've created, and you won't see those in your platform. You will see Fortune's Fastest Growing Companies 2017. So here are the stocks that Dr. Lito put in that watch list last week, and automatically, let me close this section down. When you put stocks in a watch list, notice we're looking at 100. The watch list is ranked from best to worst. It's sorted by our master indicator, VST. VST is on a 0 to 2 scale. When the indicator is above 1, that's good. Below 1, that's bad. So let me talk about what makes up VST. So let me click on Stream here just to take off the real-time data and look at the very top. So as of last Friday, MKSI was the top VST stock. Right now, as of 11:56 a.m. on October 20th, and LRCX is the top ranked stock by VST out of all 100. So let's take a look. Price of $205.06. We think it's worth $299.30. So that's a great start to your analysis. You always want to check out the relationship between price and value. Ideally, you want to buy undervalued stocks. So far so good. The next 3 indicators here are on a 0 to 2 scale. Above 1 is good, below 1 is bad. Always keep that in mind when looking at these proprietary core indicators. Relative value looks at price appreciation potential 3 years out. It looks at AAA corporate bonds. It looks at risk as well. 1.62, excellent upside potential over the next 1 to 3 years. Relative safety is an indicator of risk. It's the indicator of risk. RS looks at consistency and predictability of earnings. Sales volume, how long the company's been in business, price volatility. So what I mentioned earlier about data and how data is great, but we take that data, we crunch the numbers for you, and we spit out very useful information that's very easy to use, right? So RS, if it's an indicator of risk and it's above 1, that's good. So it's a safe investment. If the indicator were below 1, that'd be a more riskier investment. So RV and RS look great. You got an undervalued stock, great fundamentals here. Now the third indicator here is relative timing. This is a proprietary technical analysis indicator looking at the short-term price trend of the stock. Above 1, stock's in an uptrend, below 1, stock's in a downtrend. So right away in this spreadsheet, you're able to see if the stock that you're interested in is under or overvalued, what type of long-term price appreciation potential do you have, with all of that upside potential, how much risk are you taking, whether the stock is in an uptrend or a downtrend right now, and we combine all 3 of those to give us VST, value, safety, and timing, again on a 0 to 2 scale. And let's take a look at a few of these charts. Well, first off, all of them have buy ratings. Look at the GRT indicators. So we looked at a few of these on the graph of NHTC earlier. Right here on the spreadsheet is a snapshot in time. So right now, LRCX has an earnings growth rate of 28%. That's good. Fantastic. It's higher than the PE ratio. And GPE, which is growth to PE ratio, a very effective indicator that identifies overvalued or undervalued stocks. So when GP is above 1, this is a ratio, right? Growth to PE ratio. So as long as the earnings growth rate is greater than the PE ratio, this indicator will be at least 1. Growth rate above PE, indicator rises, goes higher and higher above 1. If the PE ratio is above the growth rate, you'll have a value below 1. So the higher the better, above 1 is ideal. I'm going to graph the top 10 stocks here. And I'm going to keep the same indicators that we used earlier. Growth rate, earnings growth rate, earnings per share, PE ratio, and sales. So you can see that earnings per share steadily rising. Growth rate, however, leveling off a little bit, right? So we saw the ascent earlier back at the beginning of this year, April, May, nice stair-stepper type of a pattern here. Well, it just recently peaked, end of July 2017. So we're going on 3 months now that earnings growth is slowing. That doesn't mean that the company can't continue to make money. All that means is that they're growing those earnings at a slower rate. Beautiful looking stock chart though, right? This is the ideal time that you want to invest in a company, a high growth stock company. If that's the type of investment that you're looking for, you want to invest when you see growth rate rising. Right now, I know price is hitting a new high, but we're seeing a slowdown in growth. That's the top stock. MKSI, very similar situation. Earnings per share looks great. Let me take off PE and sales here. Earnings per share looks fantastic. Recently though, the earnings growth rate for MKSI peaked at 35. This is where you want to invest during times of ascending growth, not descending or decelerated growth. I'll move to the next one. Thor, same thing. We're looking at a 1-year chart here. You can see growth has slowed down quite a bit. Earnings per share is still rising. CNC, definite slowdown in earnings growth here, right? It was recently at 27%, now it's at 22%. So you're saying, well, the stock continues to go up. And absolutely, folks, all of these stocks have relatively nice chart patterns, and I'm just going to go through the top 10. I don't think anybody would be disappointed in investing in any of these. But remember what Dr. DeLito observed when we looked at NHTC. Price continued to go up. The company continued to make money. Earnings per share was rising. Let me show you that one more time. Earnings per share was rising. However, earnings growth rate started to steadily fall. And that slowdown is likely what led to what we've seen here over the last couple of years. So all of these are great companies, folks, and they're sorted by VST. Dr. DeLito also had me put in their overall top 10. So this is their top 100 for 2017. This next watch list, again, which is one that I've created, is made up of their overall top 10. Still, great companies in here, right? Facebook, Arista Networks, NetEase, Paycom, Amazon, Ellie Mae. Got some really good companies here. What I love about a watch list, I've already went through all of these indicators, so the watch list is sorted by VST. Best stocks at the top, worst stocks are at the bottom of the list. And we could see NHTC currently is at the bottom with a sell rating. Now at the very bottom, we give you the watch list average. So let's take a look. So the average price is $223. The average value is $125. So if this was your portfolio, or at least a basket of stocks that you were looking to potentially trade, what are we looking at here? We're looking at an overvalued situation. You're paying a hefty premium for a lot of these companies right now. The average RV is at 1.16, so it's favorable. It's above 1. The average relative safety, good, 1.22. Look at the average relative timing though, 1.03. It's just barely above 1. Really means that you're looking at more of a neutral overall price performance. VST is above 1, so that's good as well. Earnings growth rate, 20% over the next 1 to 3 years. PE ratio is high. You could see, look at the PE at 44 and the GRT is at 20. Growth to PE ratio, therefore, will be below 1, right? Let me right click on it and view the average graph. Let's take a look at an average graph here. We're looking at a 1-year chart of the average price up at the top here in candlesticks, the average GRT, and the average earnings per share. So we had an RT value of 1.03. Look at the average price. Pretend this was your portfolio equity curve. You owned all 10 of these stocks. This is the type of performance, portfolio performance, you would expect here, just kind of moving sideways. That's what you would see. With an RT of 1.03, that makes absolute sense. Look at the GRT and how it's been steadily falling for the entire year. And earnings per share here is struggling as well. So while this list of their overall top 10 for 2017, you might be asking, well, are they still viable investments now going forward? Think back to what Dr. DeLito wrote in the essay last week about slowing earnings growth and how that was a real warning sign that natural health wouldn't be able to sustain the increase that the stock's price had. What are we seeing here overall with that portfolio? We're seeing slowing earnings growth and slowing earnings per share as well. If I put sales on, sales is still increasing. So what we saw with NHTC is that earnings growth generally and earnings per share tend to be the catalyst for everything else. Earnings really is that catalyst. I'm going to close out of this graph, open up our control panel again. So I think, folks, the answer is that right now, these might not be the best investment opportunities in terms of growth stocks. They were great in 2017. I think our job is to always look for the best investment possible. So going back to their top 100 for 2017, we're sorted by VST, right? So this is as of right now, October 20th. We're sorted by VST. Notice, if I go back to the top 10, not a lot of these stocks are in the top 10 VST stocks in the other watch list. Facebook has the highest VST in their top 10 at 1.34. That's up there. There aren't any other stocks from the top 10 in this list. So let me do this. Let me take the top 10 VST stocks from Fortune's top 100 and put them in a watch list. And you could see I did that here. LRCX, MKSI, the top 10 VST stocks. Now let's look at their average. This analysis here is for potential stocks moving forward. So let's take a look. Well, you have an average price of $102, an average value of $123. Big difference from the watch list of top 10 stocks that we were just looking at, right? We had a grossly overvalued list of stocks there. A lot of those companies trading at a very high premium. Here, a little different story. Undervalued overall. Look at the RV now. Relative value here for these stocks is at 1.48. That's excellent on a 0 to 2 scale. Also higher than the top 10 that we were just looking at. RS is also higher, 1.32. Look at the RT. RT went from 1.03 to 1.47. Excellent VST rating. Earnings growth rate at 24%. Look at the PE ratio here. Average PE ratio of about 21, giving you a growth to PE ratio of above 1. Right now, moving forward, on paper, this looks like a much better list because it's safer, it has more upside potential, it's undervalued, and it's currently moving up in price very nicely. And I'm talking about the basket as a whole. It's the RT at 1.47. If I right-click on that, view the watch list average, much better looking chart, right? So think back to the overall top 10. What did we see? Well, we saw a rising overall price, but we saw GRT go from upper left to the bottom right in just a very smooth, methodical manner. Earnings per share also was struggling a little bit too. Big difference here. Now, we are starting to see a little bit of a slowdown in earnings growth. Earnings per share is still rising. So what do you make of this, folks? What I would make of it is that I would want to see earnings growth rate stop falling, start to rise again. Look, we're still forecasting them to grow their earnings over the next 1 to 3 years by 24%. Still at a nice clip. But remember what we saw earlier with NHTC. We want earnings growth to move higher, not move lower. Let me go to a 5-year chart so we can also take a look. Look back here. Earnings growth was steadily rising. Earnings per share was rising. Look at that nice, steady upward movement in the price. What did we start to see right around here, 2015? Right? Slow down in earnings growth. Company was still making money, but the rate of growth was slowing. What happened to this price? Price traded in a very narrow channel here for what seemed to be about a year or so. When did earnings growth recover? I'm looking at this chart. I'm seeing right about here. You started to see lower highs on the indicator, kind of turn the corner a little bit. Right in this area here is where I would say, and I'm going to zoom in, right in that area is where I would say this is the time to maybe start thinking about getting back in. If you got out of the position somewhere back here after a really nice run and you started to observe a slowdown in earnings growth, you're looking to get back in somewhere in here, maybe at the beginning of this year as you saw earnings growth start to increase. So right now, we're seeing a very similar situation that we saw back in April, May, June, July of 2015. Just a slowdown in the rate of increase in earnings growth. So the point of all this, folks, is keep your eye on GRT. If you're a growth stock investor, there's no better indicator than that earnings growth rate. Keep an eye on GRT, GPE as well. Make sure it's above 1 if you're looking to invest in that company, and go through the other analysis as well. Whether the stock is undervalued or overvalued, how's the upside potential, type of risk are you taking, is the stock in an uptrend or in a downtrend, and finally, the VST score. High growth stocks should have very high VST ratings. Well, folks, this concludes tonight's special presentation. Hope you have a great weekend.